The biggest stock in my portfolio, measured by the value of all the shares that I own, is Meta. This is a really interesting company that has been around for, let's call it 20 years, really bringing more than 3 billion people together on one of their apps. Pretty incredible that many people come into one company. And as I should do with every one of my stocks, especially the stocks that are worth a lot of money in my portfolio, is I'm looking at this stock very closely just to make sure any information or news that I should be aware of, I bring up to the surface and make decisions on my stock. Now, this stock is so important that I'm going to really slow down and go through each step of my methodology, which includes looking at the company, looking at how desirable the company is based on the moat that they have, the competitive barriers that this company has against competition, looking at their revenue, how they're growing revenues, also looking at their future prospects for revenue, looking at their fundamentals like free cash flow and earnings per share, their balance sheet. Do they have a lot of debt or not? And valuing the company based on those fundamentals, getting to an intrinsic value of what I think each share of Meta is worth. And that will lead me to a decision of continuing to buy shares in Meta, just holding my position, or even selling shares of Meta. So as I go through, keep in mind, I'm a long-term investor. This isn't a video to talk about how I'm going to make a lot of money on Meta stock in the next 30 days. It's more of a video of how I can really make a lot of money on Meta over the next 5 years. That's really my investing recipe, is to make money each year and really pick great companies to invest in that I want to hold for a long time. Now let's get into Meta. The fundamentals of this company are very strong, and they should be, because the company is valued well over $1.4 trillion of market cap. And the company has revenue of $149 billion. So they're about 9 times revenue is their valuation. Net income is really high. Basically, a third of the revenue ends up as net income, going to show that this company has really high margins. Very desirable when you have a company that has that much margin in their business. The PE is 28, which isn't all that bad considering, as I'll show later, that they're a growing company with very strong competitive moats. The PE is 24 for the 2025 year. Analysts think it's a really strong buy, but it's fairly priced according to their valuation, which is primarily based on earnings per share. The company will announce earnings on October 23rd. So that's basically in about a month. When I look at their financials, something that's very impressive is their growth. They grew in the trailing 12 months by more than 24%. That's on already a very large company, growing up to $149 billion of annual revenue and being very profitable as they do so. So the revenue growth really shows the company has a lot of growth. Customers like their apps. There's more customers joining their apps. Advertisers really like the return on investment they have when they advertise on Meta. All those conditions look favorable when you have a very good growth rate like Meta is showing. In addition to that growth rate and profitability, the company generates very high free cash flows. And if you look at the companies that are worth over $1 trillion in value consistently, they all generate free cash flows. That's why I use free cash as the number one indicator of the value of a particular stock. In the case of Meta, in the trailing 12 months, they generated almost $50 billion of free cash. So it's not an accident that high free cash flow generating companies end up being the most valuable companies on the stock market and stay there. That's why I use that as my number one fundamental for valuing a company. In addition to free cash flows, I like to look at earnings per share. In the case of Meta, they have earnings per share that are very good. A lot of analysts cover this stock. 39 analysts cover Meta. And they all agree it's a great company, but valuing the company based on earnings per share, it starts with the earnings per share for 2024 is expected to be $21.63. And it's going to grow nicely in the next couple of years. The PE will drop because the earnings per share is expanding. So those things look really good to me. I'm going to use earnings per share as well to value the company just to see where that number shows up. Most of the value that I'll calculate for Meta will be based on free cash flows, and I'll show that to you in a few minutes. The Meta stock has really risen over the last 5 years. If you bought Meta stock and held it, you'd be up 195% over 5 years, which is a great return. But in addition to that, investors that bought in the late 2022 timeframe could have picked up shares for under $100 per share and saw those shares really go up 518% over the course of about 2 years, which is a phenomenal rate of return. You can see that the last 2 years have been really good for this stock. Now, as I look at how's this stock going to perform going forward, one thing that I see is that for the last 6 months or so, the stock hasn't risen a whole lot compared to its recent historic gains. So it's not like the stock's exploding and really getting out of hand. So that's a trend that I'm also going to take into account as I make a decision whether I should buy more shares of Meta. When I look at the fundamentals of Meta, the businesses that are currently running are in those numbers, like Facebook, Instagram, WhatsApp. But what's not included in the valuation, and I believe is a bonus to investors, is the AI business that Meta is creating. It's quite impressive how far they've come with their AI strategy. They both have a consumer facing or user facing interface. It's really great. It's presented to 3 billion plus users of one of their apps. It's provided on Facebook or on Instagram. So it has a really big opportunity to be adopted by many, many people. As I look at the stock, the AI business is not being priced in the stock. And it's just a bonus. So it's good to have it in the back of my mind. And I'll continue to take a close look at the AI business and see how far they're getting. More importantly, how will they be able to monetize their AI business? Meta's business is really exciting and growing very quickly. Now, let me value the company. And I'm going to start with their cash flows and value the company based on the net present value of all the cash flows I expect the company is going to produce in the future. And as mentioned earlier, Meta just produces very high free cash flows. My best estimation that in the trailing 12 months, they're going to provide $49.54 billion of free cash, which is a lot of free cash. In years 2, 3, and 4, I believe they can grow those free cash flows by 10%. And in terminal value, which is after year 4, I expect they're going to grow their cash flows by 5%. All those cash flows amount to a total number, and I'm going to discount all those future free cash flows by 7.5 as the discount rate. I'm using a lower discount rate because they have an excellent balance sheet. They have more cash than debt. They continually produce more cash. So their balance sheet is excellent. Their business is very, very good and resilient as people continue to use their apps and advertisers get a lot of return on investment from this company. When I do a net present value calculation of the net present value of all those free cash flows, I get to a value of $2.1 trillion of value. It's a lot of value. I add the cash, 58 billion, take away debt, 18.3 billion. I get to an equity value of $2.1 billion. When I look at the current stock price versus the share per share value, I get a 51% discount. That's how much cash this company produces. When I look at the net present value of that cash, I come up with a 51% discount. This represents 66.6% of my valuation. 1/3 of the valuation, I depend on earnings per share. They have a solid earnings per share number of $21.63. I'll use a PE of 26, very reasonable, growing company, excellent business, excellent profitability, no debt. So 26 is a good PE. It might be a little conservative. The growth rate of 10% as well as a little conservative, and it gives me about a 10% discount. So I'm a little more optimistic than all those analysts that are covering Meta. When I combine the two, putting more weight in the free cash flow method, putting 2/3 weight on free cash flow, 1/3 on earnings per share, it provides a 38% discount. So very good discount on an excellent company. How valuable is Meta? And that really is a qualitative decision in my mind based on how strong are their barriers of entry against competitors. Do they have a large, wide, powerful moat? And therefore, they'll continue to grow at these rates, continue to drive these profits and these cash flows. And in my opinion, Meta is an exceptional company with very strong moats. In fact, I put them squarely in the green, my most desirable zone of my quadrant of desirability. And the reason for it is Meta's become a clear dominant player in social apps. And they got there by really both building a Facebook business that is very desirable to users, as well as great acquisitions. Instagram was a great acquisition. WhatsApp was a great acquisition. Therefore, they've become really powerful. They have over 3 billion people on earth logging into a Meta app. That is very powerful. It's now setting them up to be a successful AI business. They can offer their AI apps to that particular population, which is really exciting. Therefore, this is as desirable a company as I could measure. Having said that, the company has really performed well for me. I have invested a little over $100,000 in Meta stock, but my stock is worth $240,000. So I've achieved $134,000 unrealized gain and 126% overall return. It's the biggest position from a stock perspective in my portfolio, and I had been holding off from buying more shares, but I'm removing that hold and I'm going to begin to buy shares in Meta. And it is the biggest stock in my portfolio, but this is a great company, and I'm perfectly fine just being overweight on this stock, continue to accumulate more shares because the future is really bright for Meta, and I just want to have more shares going forward. So that's my analysis, my investment in Meta, how I go about analyzing a company, and my decision on what I'm going to do with this stock. As always, I'm one investor sharing my experience with YouTube and other investors, and I hope you found it interesting. I'm not recommending you buy Meta, hold it, sell it, or do anything with the stock. All of this video is for educational, entertainment purposes, and I hope you found it interesting. Let me wish you the best success as we close out 2024. I hope you enjoy your weekend.